Good morning, good afternoon, good evening to wherever you are in the world. Welcome back to another episode of the Coffee Hour. I'm returning back from traveling, so I'm excited to be back. A lot of news that was happening over the last couple of days. Definitely still a lot of fallout from news from over the weekend. It seems like the geopolitical stuff has just been, completely taking over all of my news feeds. So we got a lot to talk about. All right, we're going to catch up on a lot of news here. We got some video footage to go over, and a couple, analyst pundits videos just to cover. We have some articles as well. We're going to be talking about Broadcom earnings. We're going to be talking about Nvidia and Openai, what's going on with AI in general. And then we'll cover just a couple of new ETFs that are coming out. So first and foremost, as always, I appreciate you guys joining me for the stream. Got to upload this to X, of course, because X does not want to communicate with StreamYard. I don't know what's going on there. There we go. Let me just share this post real quick like so. Let's see, post this. So I hope everyone's doing well. All right. I know there's been a lot of crazy news going on. And some of it is kind of depressing. Well, especially what's going on in the Middle East, right? Especially what's going on in the Middle East. It seems to have rocked the markets. You don't know which way the market's going to go. Yesterday, we had a huge sell-off, a massive sell-off, especially in the metal space, right? A lot of miners, silver miners, gold miners, just miners in general seem to have just sold off. Meanwhile, Bitcoin rose right out of nowhere. We had this insane God candle coming from Bitcoin. And again, nothing in this market makes any sense whatsoever. So we're going to hopefully cover, some of that and try to get through the mud. It's clear as mud, as they say. So let's go ahead and get into it. First off, let's see. We got Sergio in the chat. Hey, welcome back, Sergio. Always a pleasure. Got the coffee ready. I also have my coffee ready, right? Also. So let me get a sip real quick. Padre says, coffee ready. I'm already one pot deep. Yeah, this is my second cup. So I'm finishing off the pot. So I usually go through about a pot of coffee, between now and the end of the stream. I'm a coffee addict. It's bad. You don't even know when you're addicted, right? But hell, if this is one addiction, I don't want to kick because I need coffee. Let's see. Good morning, everyone, says Phil M. Hey, welcome back. Always a pleasure. Let's see. Sergio says, oh, yeah. And then we also have Wolf in the chat saying, good evening, everyone. Well, good evening to you, sir. Okay, let's get into it, guys. Let's add this bad mamma jamma to the stage. All right, so we see that we're a little, Christmas lights, right? We got Christmas lights, but we did get a nice pump in, at least the technology space. It looks like some money did decide to come back, right? We have Amazon up 3.88%, Tesla up 3.44%, Nvidia up, and then we also have the software sector. All right, still getting crushed, unfortunately, computer hardware sector doing good, the semiconductor space doing really well, and then of course we have communication tech doing well as well. So we have a lot of the money going back into technology, but software still keeps on getting pummeled. Well, it looks like software finally updated, so we're actually above in the green now. It looks like CRM, Salesforce is the one taking the brunt of that beating. All right, so we have Sith of Mordor saying my portfolio is as red as Darth Vader's lightsaber. My man, dude, my man. You know what? I saw this meme. It was a bunch of candles going up to the right, and then just this big deep red candle, and the quote was, "No, that's not Bitcoin. That's not the S&P 500. That's my portfolio." So I'm feeling the pain right there with you. I pretty much got clobbered in my portfolio over the last day, but today was a nice turnaround, especially since Bitcoin is doing well now. Wolf says, yes, looking for another green day or hoping for one anyways. I'm in agreement with you. We got Super Straight Guy. I'm 14% down in my portfolio. Well, when you compare that with other people, sometimes you feel better, right? Sometimes you feel better about yourself. If you want to feel better about your portfolio and your picks, go to Wall Street Bets and look at the lost corn, right? Look at the lost corn. You'll feel much better about your portfolio. Like when I see some of these, these degen bets, I'm just like, you know what? I feel better about myself. We have from Bon. Hi. Well, hello to you. All right. So anyways, let's move on. So we just want to cover just a real quick, the rotation of money, right? The rotation of money, the sector rotation, right? So we get this data from Jane Street, or not Jane Street, excuse me. They would never give us that data. We get the information from State Street. Okay. And we can see over the last day, communication services had a little bit of a pump, right? But we see the bigger, outflows coming from materials, industrials, and continued information tech, as well as healthcare, right? But over the last 5 days, we have energy and comms making a run, right? Financials getting a small little pump over the last month. We still see that energy, utilities, real estate is doing very well. I think real estate is probably going to have its time in the sun very soon. It would be a very big contrarian bet to get into, real estate, REITs, real estate investment trust, because they've been in such a bad bear market over these last couple of years. They've been in a bear market since 2022 when interest rates were rising, right? The fastest in pretty much the history of the United States as it is. So pretty wild stuff. Hopefully, real estate will get its time in the sun because they've been getting clobbered. All right, S&P 500, we are up almost a full percentage point for the day, up 78 basis points. So over the last 5 days, this was that big dip that we had on Monday. The market pretty much was digesting this whole conflict pretty well, and then just a huge sell-off. Typical stuff, right? Ebbs and flows of the market, peaks and valleys, right? But we had a nice climb back up to the upside. IGV, which is the I like to use this as kind of like a indicator, but this is a software sector ETF. We can see over the last 5 days, it's actually starting to climb, right? So it's up almost 5% over the month, up almost 2% or a little past 2%. But year to date, it is still down quite a bit, 16.54%. And if we look at its, former high, we could probably go to October. We can see that it was still down about 27%, right? 26%. It was down closer to like 37% when everything was all said and done. So, again, if we start to see this turn around, that is a signal, at least in my mind, that money is returning back to software, returning back to risk on, right? The software sector has been getting pummeled with all of this talk about AI disruption, AI, software able to do or destroy some of these companies' moats. So we'll see as time goes on what's going to happen, especially with the software sector, because it is a sector ripe for disruption. Again, you're having all these companies start to lay off all their developers, right, and replacing them with AI agents. There's a lot of YouTube videos coming out now where people are installing Claude on their Mac Minis or their iMacs, whatever, and then basically running agentic AI, right? They have agents doing pretty much all these tasks for them. It's pretty cool stuff. Like I want to get into it myself. It would be pretty cool. Don't use it as a trade bot. You might be upset. I've seen a couple videos where I don't know if they're being for real or not, but basically the Claude bot was doing, had all these windows, all these, charts up, everything. And it was supposedly doing some of the trading for these people, and they ended up pretty much losing all of their money. So just be careful out there, ladies and gentlemen. All right. So Padre says, I need more tabs. Absolutely. 7 Hindenburg moments this month. Probably, yeah, I would say so. And it's going to continue. Definitely going to continue. All right, so let's move on. So for gold, all right, we are up 78 basis points as well. So same as the S&P 500. Again, year to date, best performing asset, still up 18.46% over the last 5 days. You guys can see this massive drop, right? None of this, in my opinion, made any damn sense, because whenever there's wars, whenever there's missiles flying, there's a quote out there, when missiles fly, buy, right? But it seems like gold just did not want to cooperate, and it had a pretty sharp sell-off, right? Pretty sharp sell-off along with the gold miners, the ETF like GDX, or even silver. Silver had an even bigger drop, right? Taking a look at silver, speaking of silver, all right, over the last 5 days, we could see that, right? We see that really, really bad drop, down 15%. All right, year to date, still up about 15 or 14.5%. It looked like it was starting to climb back up 28%, and then it just had this really nasty drop, right? I'm gonna front load this one. Let me see if I can find it right here. Yeah, so I'm gonna front load this one. I was gonna cover it later in the stream, but Jane Street actually has a massive position in SLV. All right. And this was from their last 13F filing, if I'm not mistaken. So Jane Street massively increased its silver holdings, sparking claims of potential silver price manipulation, which, wouldn't be far-fetched. This is why we see things like this happen all the time, right? Or things like this all the time. The firm faces a separate allegation of suppressing Bitcoin prices via ETF mechanisms and past crypto ties. Again, they were responsible, or it seems allegedly they were responsible for the collapse of Terra Luna, which also led to the collapse of FTX. So again, it's just, these market manipulations happening, these large hedge funds, institutions that are able to move the market in ways that you and I really can't do. It does suck, especially when you're, buying silver somewhere at the top, somewhere, let's see, 6 months. Yeah. Somewhere right here when you're buying silver, and then you just lose pretty much a portion, almost 35% of your entire position, right? Overnight. And you have no idea. The fundamentals didn't change, right? You had a huge pump, of course, right? Big pump. And some of this, we see from JP Morgan closing their shorts, right? All these people are talking to each other. Right. It's all coordinated. It's shitty. Don't get me wrong. I hate to use that term, but it is shitty when you're dealing with this. This is exactly who you're fighting against, right? You're fighting against these market makers, these institutions, the insider trading, all that. You're fighting against that. Anyways, let me get off that. Okay. So Bitcoin finally broke above 70. We're breaking above 72,000. All right. If we can keep this, if it could keep going further, we're heading for 80, 85,000. All right. I can't see this going back down. I was hoping for at least 55, 58,000 a coin. Not probably going to see that, right? I don't think we're honestly going to see that. This may have been the bottom in the $63,000, $64,000 range. So potentially we climb higher. Again, I have nothing backing that up. I'm not a chartist. I'm not a technical analyst or anything of the sort. But I just think, based on everything I've read and everything I saw, a mix of YouTube and just social media, that the strong belief is that we're going to go higher from here. Is there potential for volatility and pullbacks? Of course, right? It's Bitcoin, but there is still, the potential that it can climb at least higher, reach at least 100K. So I actually increased my IBIT position. I increased it by about 6,000. So I'm close to, 1.5 worth of Bitcoin in IBIT shares. So I've been steadily just accumulating, and I want to get to 2 Bitcoin before the end of the year. Hopefully, again, I was really hoping we'd go lower because I wanted to buy a bigger tranche of IBIT. But if I see us go to maybe 80, I'll probably deploy a little bit more and then probably stop there and then see what happens after the fact, or see what happens later. Okay, so enough of my stuff. We're going to get into some high yield ETF news. All right. Because we had some news drops, some new prospectuses drop. So shout out to Skeptic if you're in the channel. All right. Appreciate you staying on top of this. He's in the Discord and he's always posting information in the, what do we call it? The ETF filings and updates. So he pretty much is always on the SEC, the SEC Edgar database, just pumping out this stuff. All right, so let's see what those 2 new ETFs are. I'm not going to go super in depth in these, all right, because I'm sure another channel will cover this at some point in the future. I'm just going to cover it at a high level. I will post the links after the stream in the comment section, probably for show notes, okay? Maybe that's what I'll do going forward. So if anyone wants to reference things, they can reference the links that I'll post. But anyways, this is the prospectus, okay, for these 2 new funds from Tap Alpha, right? They have the MAG 10 growth and daily income ETF, as well as the Tap Alpha small cap growth and daily income ETF. All right. These are the tickers. We have no idea when these are actually going to launch. I would probably put it at about 90 days when these would eventually hit the market, because it takes about 3 months for ETFs to come online. So we'll see. All right. But yes, I think this is a really interesting one, especially since it's going to have MAG 10. MAG 10, if you don't know, it's basically MAG 7 with Broadcom, Palantir, and one other one. I always forget the last one, AMD, I think. All right. So it's usually just the MAG 10 plus those 3, or excuse me, the MAG 7 plus those 3 additional companies. Again, this is going to be another vanilla, income ETF, right? Not exactly a whole lot of hoopla, right? But they're adding some, they're going with a 0 DTE strategy. So daily call options have 0 days to expiration, also known as 0DT options. Though this call option strategy, the fund sells or writes exchange traded call options to generate income from option premiums. These may include, but are not limited to selling call options on the Mag 10. All right. While the fund expects to primarily utilize 0DTE call options, the fund may also utilize options with longer durations, including weekly, monthly expirations, and may purchase put options or put spreads. So there you guys go. You get a little bit of hedging in there, a little bit of protection. Buying a put option at one strike price while simultaneously selling a put option at a lower strike price in connection with its options overlay strategy. The fund may also implement multi-leg option strategies such as credit spreads, call spreads, put spreads, defensive actions during periods of heightened market volatility. Multi-leg option strategies involve buying or selling options at different strike prices or different expiration dates. All right. So again, I'm not going to go super in depth into this. You guys can check out this word salad. All right. This wall of text. And just read through it, right? Really, all you care about is the strategy. What are the principal investment strategies? Because we know that the expense ratio right here, right? It's going to be 75 basis points, which actually is a little lower than most. Most are at about 99 basis points. So, 75 is actually a pretty decent one. So, we have these two new ETFs coming out again for the Mag 10 and for the small cap growth and daily income ETF. So keep your eyes peeled, especially if you're looking for a product like this for your portfolio. We also have from Tuttle, all right, from Tuttle Capital, SPY 0DTE income and hedge ETF. It's pretty much the same exact thing that I just covered. All right, a lot of these ETF managers are now including, all those hedging strategies, puts, put spreads, et cetera, same exact stuff. Okay. They're going to be doing 0DTE on SPY and, they're going to be implementing all of their, all those other strategies. All right. One interesting note that I just thought, that I'm looking at in here is unlike a traditional cover call strategy. So they're not going to be doing cover calls, right? The fund generally will not own SPY directly, although it may. Instead, the fund will derive its synthetic long exposure to the price return of the reference asset through the use of option contracts with a longer maturity date that utilize SPY or the S&P 500 index as the reference asset. The fund's long exposure would generally consist of the fund selling puts and purchasing calls on SPY and the S&P 500 index and direct investments in SPY. All right. Again, these prospectuses, the links to the prospectuses will be in the show notes at the end of the stream, so you guys can check it out. I'm sure there will be other YouTubers covering this stuff later on, right? But we're looking at a 95 basis point, expense ratio. So these are the two that are coming out. You're going to have the S&P 500 or the SPY 0DT income and hedge ETF, and the Capital Innovation 100 or the Nasdaq 100 income and hedge ETF. So these are going to be similar to like your XDTE or QDTE from Roundhill, or SDTY or QDTY from YieldMax, but they're including a hedging portion in the ETF, right? In the ETF investment strategy. So that could prove to be, useful, beneficial for the ETF. Maybe we won't see all that dreaded NAV erosion, right? We'll have to wait and see. Of course, me personally, I will not just be buying stuff just because it comes out or because it pays on a certain day. So let's see real quick in the chat. Let's see. Useless information. You are nobody. Completely useless, says Mustagai B. That's an interesting guy. Useless information. Well, I don't know what you're looking for, bro. You seem to be upset about something. All right. So let's see what else we got. So we have, let's see. Sean. All right. I saw Sean Lively saying, I made it. Well, welcome back, Sean. All right. So, all right. Moving on, guys. We have YieldMax rebalancing. Just real quick. Yeah. So we have YieldMax doing a rebalance. All right. So we're excited to share the initial rebalance of YieldMax. So this is going to be their first step in the enhanced strategy, right? So they wanted to basically include a unit, all their ETFs, right? And they wanted to be able to swap them in and out depending on the market conditions, right? So this is what we got. So this is the YieldMax rebalance. Why the change? Recent market conditions highlighted the limits of a static equal weight approach. YieldMax now incorporates a momentum income allocation process designed to improve adaptability, risk management, and long-term performance. This rebalance reflects the evolution in action. All right. So as we can see, they got rid of a bunch of stuff. All right. So they got rid of a lot of deletions. They got rid of IYY, which I believe was a AI cover call ETF. AMDY, AMZ, Babo, Coney, Canvy, Disney. Yeah, they got rid of a bunch of stuff, but they added Chippy. Okay, these are the interesting ones. So they added Chippy, they added RDTY, which is a real estate fund. They added, or is that RNTY? I think the RDTY is the Russell 0DTE ETF. They added RNTY, which is a real estate one, Soxy and Ulti. All right. The working investor, shout out to him, he brought this up, but he said Soxy and Chippy are two of the same basically plays. And I mean, you can look at the web pages. They basically hold the same, same holdings. But Soxy is a target 12 distribution, whereas Chippy is like, hovering in the 40s. So I could see why they would just add both. I mean, they're doing pretty well. Semiconductor space in general is doing pretty well. I don't know why they added Soxy and Chippy. They could have just went with Chippy, because you're going to get that higher distribution rate. But I mean, who am I, right? I'm just some random dude on YouTube. Them adding Ulti, I don't know how I feel about that one, but they added Ulti. Okay, they added Ulti for whatever reason. So here is the YieldMax portfolio post rebalance. All right. And you'll notice that there's more of the broader based ETFs than there are of the single stock cover call ETFs. All right. So they still have Roblox, Appley for Apple, Berkshire, but they have Chippy, Soxy, GDXY, which is the gold miners, GDXY, Ulti, and one other one. What was the other one? And Soxy, of course. Right. So I don't know what the actual weightings are for each of these ETFs in the portfolio. We'll find that out after, probably tomorrow after it gets published. But this is what the post rebalance looks like. All right. So will this be an improvement for YieldMax over the long term? I think the strategy itself is probably a smart move, but will the actual, NAV appreciate? Will all that other stuff, do well for the actual ETF? I have no idea. We got to kind of wait and see. I think it was, like I said, a smart move for YieldMax to start including some of their, premium products in the ETF, not just a bunch of cover call NAV eroding ETFs like you saw here, right? You have GOOY, HOY, AMZ, just all of their cover call ETFs. There's only really one direction they all go in, and that's down and to the right, right? But again, if you understand the cover call strategies that they're using, you would probably not even really flinch at that. You'd be like, whatever. Like most people don't care about that. They're looking at, total return. They're looking at the distribution rates, all that stuff. So let's see. So that's pretty much it for the high yield part of the stream. Let me just go back real quick. William Landlord says, ban that troll. I mean, I don't know what's up with Musta. He must have pissed his pants or something. I don't know. He's upset about something. That's the type of person that invests in ETFs that he doesn't fully understand. He needs another person to tell him to basically go invest in something, right? He needs that. That's probably my takeaway from his comments. That's what his comments tell me. But anyways, not going to bash on the guy. We don't need to ban him. Okay, so moving on. So we're going to go over some market news. All right, so we have Tom Lee. We're going to go over a kind of a longer video. CNBC didn't actually post, they only posted like a 2-minute clip, but I found the full clip and I wanted to cover this because he also, in this clip, it's not just Tom Lee, it's also Jeremy Siegel as well. So let's listen in on this. All right, and I'm not going to put myself on mute and the audio should be working. If the audio is not working, please let me know. All right.
Here with us at Post 9. It's good to have you back. Your thoughts as you look at these markets. Been real interesting price action over the last couple of days. Thought our reporters set the table very well on the issues at hand that investors need to keep their eyes on. What about yours?
Yeah, I think the headlines have been scary. No one wants to see the U.S. in a conflict, but I think it's been spot on to note that markets have been taking this much better than expected. I don't think anyone can say we're bottomed yet. But this is what looks like the makings of a bottom, right? That you get bad news and the markets are taking it in stride. And more importantly, I think we've had a position reset. And so on the other side of this, I think is going to be a lot of opportunity.
What would give you the confidence to say, you know what, that's a sign of a bottom? What do you need to see?
Well, some things like if we go back to April, a simple thing would be the VIX making a spike to over 40. Last year was 80, but we won't get to 80. And then, of course, retracing. that would be a clean sign because that's so much de-risking. Another sign would be we get another scary headline and gold continues to sell off, and then stocks actually turn green on the day because that means we've washed things out. I think we're pretty close.
You're watching oil as closely as everybody else is. I thought it was interesting, some of the notes today. UBS says we expect only minimal or a brief disruption to global energy supplies. We therefore stick with our base case that U.S. equities, will produce good gains this year. Katie Huberty over at Morgan Stanley. Recent geopolitical events unlikely to change our bullish view on equities over the next 6 to 12 months.
All right, so you guys, I just want to cover this real quick. All right, so Morgan Stanley saying that their bullish view on equities are unchanged. They are going to see them continue to climb higher despite all the volatility, especially with the geopolitical conflict that's happening right now in the Middle East. And also, just I'm going to front run this as well. There's also some exciting developments happening in Central America, which we'll cover here in just a moment. All right, but anyways, let's continue listening in. But interesting thing about here, expectations for U.S. hyperscaler spending has accelerated materially over the past year, and their aggregate capex to sales this year is expected to exceed .com peak. All right, and despite the recent volatility, we believe the investment case for owning AI adopters continues to strengthen. And this is coming from Morgan Stanley.
Yeah, I mean, I think oil. I think we saw things that kind of made sense to me. Oil spiking on closures or potential closures of the Strait of Hormuz, but the response from Washington. And I think that's maybe more important, that I don't think Washington wants high oil prices into the midterms. And of course, it's very unpopular with Americans. I mean, it's a big burden. So I'm going to be in the camp that I'm watching the price action. I think it's encouraging that oil's not surging into the close.
A part of the Huberty note focuses on the AI trade, which has been really interesting, I thought, over the last couple of days. Back, some might say, to the safe haven type price action. I mean, look at right now. Microsoft's up, Meta's up, Amazon's up, Nvidia's traded better over the last couple of days. What do you make of that?
Well, in our view, March was the makings of a bottom because the software, the Mag 7, and the cryptos we thought were like 90% through to their winters or declines. They are outperforming, and I think that's a sign of leadership. But fundamentally, you're absolutely right. If we get global trade disruption, you still need AI and you still need the Mag 7. So I think they're actually good fundamental stories.
There's a technical side to this story too. Stay with me just a second, because certainly one of the key questions facing investors, what to do in the markets given the unrest in the Middle East and the uncertain road ahead. Our next guest, in fact, is watching the charts for some clues. BTIG's Jonathan Krinsky joins us now. It's good to see you. A note from yesterday said, quote, "When missiles fly, time to buy." Expand on that thought, if you could.
Yeah, good to see you, Scott. So, I mean, I think, if you look throughout history, geopolitical conflicts are rarely a long-lasting negative catalyst for markets. They tend to be short-term isolated events. And, once we get some clarity on the event, the de-risking kind of tends to reverse. And there's some things you asked Tom, what do you need to see a tradable bottom? So there's things we watch similarly to kind of give us clues to that. One thing he mentioned, the VIX, we look at the VIX curve. So looking at spot VIX versus the 2-month future, that was inverted by about 4 points. That's the most since last April up to the low. So there's certainly room for it to invert more, but that's a sign that you're probably in the later innings of the sell-off when you finally see that inversion. As far as oil goes, we look at the energy stocks relative to oil. So this morning, crude oil was up about 8%, but the energy stocks, if we look at the XLE, was unable to take out yesterday's high. And in fact, it traded red well before the recent headlines that caused oil to give up its gain. So those were two signals we were watching. And I think finally, if you look, kind of at the internals of the market, what's working, what's not. We kind of have a first in, first out with areas like software, which has been, that was one of the first groups that went green this morning. So it seems to us like that is fully washed out. And then finally, they're finally selling the leaders, right? The memory stocks, I think, were kind of the final holdout in this bull market. We saw Korea, which is an area we were cautious on last night, down about 7%. So a lot of the memory names trade in sync with Korea. So we're finally seeing those last holdouts kind of get sold. And I think that's another sign that we're probably towards the later innings here.
All right, we'll make that the last word. I appreciate you joining us with a really good look.
And just as a reminder for people who may not have been following the ETF EWY. So EWY was the South Korean ETF, and its two largest holdings in that ETF was SK Hynix and Samsung. And we saw that in the South Korean stock market, they had a crazy drop, like 12% in a single session on their index. So imagine Liberation Day, right? For them, like that's how bad it was. But it wasn't driven by geopolitics. I think, in my opinion, I think, if you look a little bit below that, it's probably a lot of profit taking. I mean, that ETF in the South Korean market just was going up and to the right parabolically. Like I hate to say it that way, but it was a crazy run up for that whole market. So for that market to finally cool down, lose some of that steam, and people to start taking profits, I mean, it's just normal ebbs and flows. But if you look at that ETF, like I said, EWY, absolutely insane. Anyways, let's continue listening in. So just summary of his point of view. He was saying that when missiles fly, that's the time to buy, right? Basically, he's talking about the uncertainty, right? The uncertainty of war, and usually it has negative impacts on the stock market, right? But whenever these events happen, and I hate to say it this way because nobody likes war, nobody likes death and all the craziness that we're seeing on social media, missiles flying left and right, etc. But just as an investor, from an investor's perspective, that I could see why he would say something like that, because that is usually when the market sells off. The market does not like uncertainty, does not like war. And usually that's when everything begins to sell off and create these discounts, right? Or these opportunities for investors. So again, I see why he says that. This was more or less, I don't want to call it a black swan event, but Tom Lee will probably reference this as some type of a black swan event. Nobody had this on their bingo card. That not an invasion of Iran, but strikes on Iran, a campaign, an operation against Iran was definitely not on the bingo card. And of course, looking at this a little bit further, a little bit deeper, you still have the Strait of Hormuz being contested. There's a lot of misinformation flying around. Iran wants to make a deal. Iran doesn't want to make a deal. You have the Iranian Navy pretty much underwater at this point. And you have the Trump administration basically promising these shipping companies that, hey, we're going to, back you up. We're going to offer insurance for you in case your ships or your cargo gets struck or lost at sea, right? And they're backing this up, for all these container ships and all these oil LNG ships, etc. But looking at it a little further, you have Saudi Arabia. They closed down, I believe, one of their plants. You have Qatar, which shut their LNG. I don't want to call it port, but I guess it's a port. But they basically shut off their LNG manufacturing, I guess. So it'll take about 2 weeks for them to get that back online. And right now it is a pretty crazy time in the Middle East for any type of oil to leave, right? So we saw that in the commodities market, especially the oil market. We had this really crazy run up. And now it seems to have softened a bit. There's a little more certainty coming back. The United States is saying, hey, we will not only patrol that area, the Strait of Hormuz, but we're also going to, basically ferry ships in and out of that area and ensure their safety. So it's getting pretty crazy for the commodities market, but let's continue listening in.
And a simple to understand one on all things that are happening from a technical standpoint, perhaps within the market. Let's bring in now the Wharton School Professor of Finance, Wisdom Tree Chief Economist, Jeremy Siegel. Fundstrat's Tom Lee, of course, is still with us. Professor, it's good to see you. Love your thoughts here on what you make of these market moves over the last couple of days based on your experience.
Yeah, well, when I sent my notes over at noon, Scott, I said we have to keep the Straits of Hormuz open. I said that was critical. And the news we got over the last hour is really good about that. I certainly expected the U.S. to provide insurance, but we need the escorts. And I think success on escorting tankers through would be a big political victory for Trump. Some of the early developments that we had hoped for, the rising up of the Iranians, the replacement of the supreme leader by someone that would negotiate with Trump, that has not happened so far. So I think the next step is if we can keep that straits open. Iran has said, we're going to prevent tankers from going through. That would be a political victory, and I think that would be very, very positive for the market. But that's going to be something that I think we all want to see over the next week or so.
Professor, you've seen a lot of markets during times of turmoil, certainly war and other events that have shaken investor confidence at times. Are, in fact, those moments what the charts have suggested to Jonathan Krinsky? Missiles fly, time to buy?
Yeah. Generally, the fright of war and the angst of war has been a time to buy. When World War I started, people, the exchange was so nervous that there was going to be a total collapse. They closed the New York Stock Exchange for 6 months, which is the longest period of time in U.S. history it's ever been closed. But the war actually happened to be good for the U.S. economy. So that when they reopened it, stocks were rising, and then they just absolutely soared up to new highs. So that sort of told people, you know what, wartime is not always a bad time for the markets. And certainly we're not in World War I, World War II. Certainly let's hope it doesn't get that way. But it had those periods, when VIX is above 20, I know Tom wanted to go above 40. That would be the spike that would probably mark the bottom. But it means there's an awful lot of hedging that is going on, a lot of risk positioning. If we get through this war with some of our objectives through, I think we're ready for a big bull market in 2026.
You want to opine on that?
Yeah, I agree with almost everything said by both Krinsky and Jeremy Siegel, that this is all the hallmarks of creating some good opportunities. So I think investors do need to look beyond the headlines, maybe think 3 months, maybe even a month forward, and we just have to kind of wash through this bottom. But we already know where the leadership could be coming from. It's the software, the Mag 7s, and even the cryptos.
Professor, does this, like Tom's suggesting, perhaps rekindle the mega cap trade in some respects, for the idea that at times of turmoil within the markets, these have tended to be a bit defensive?
Yeah, well, I remember once we thought that Apple was the big defensive stocks. When there's times of potential recession or international disturbances, really no stock is totally immune. We really need to get through this, I think, for the bull market in both segments of both the value stocks and the rotational stocks as well as the Mag 7. But, let me tell you, when you take a look at some of those, the Mag 7 stock like Nvidia that selling in the low 20s, some even say lower in terms of price earnings ratio, that is an awful lot of discounting, let me tell you, for a company that has been growing 30-40% a year.
Yeah, you would agree, though, in the bigger picture, as we wind our conversation down, that energy, that complex, and oil prices are the most important thing to watch right now, not only from a sentiment standpoint, obviously for the economic fallout perspective, and then how it relates to the Fed as well, and what its road politics ahead is going to be.
Yeah, and as Tom mentioned, we are coming to the midterms, and we have had low oil and gas prices under Trump. Now, the wholesale price of gas, let me tell you, has gone up 50 cents over the last 3 days. Now, it takes about a week to work into the pump. I worked it out that if it does go up by 50 cents, we will be in the middle of what gas was during the Biden administration, but no more Trump discount that he was counting on early on. So it's not only a question about the Fed does and the economy. It really is going to be important for the political outlook.
Tom, you get the last word.
Yeah, well, I'd say I think investors just need to be kind of patient, cautious, and wary, have a bit of firepower, but I think opportunities are emerging.
All right, gentlemen, I appreciate very much the conversation as always. Professor, we'll talk to you soon.
Ryan Pluck says Clarity Act over 70% now on the poly market. So I will actually be covering that here in just a moment. But you guys heard it. You're gonna basically talking about the uncertainty, right? And once this wave is over, right? Once we get over this whole geopolitical unrest, depending on what happens, in that area, bull market will continue. And just real quick,
Tom, thanks for coming.
Just real quick, I wanted to cover because they did mention what was happening, over there. So here is an article. All right, Qatar. Oh, come on, let's go. Anyways. I hate these ads. Okay. Qatar LNG, Saudi refinery, Israel oil, gas fields down due to Mideast strikes, right? So that's one article you guys can check out. I'm not going to cover it in this stream because it's not a part of this lineup. And then exclusive, this just happened. Qatar shuts gas liquefaction. Will take weeks to restart, sources say. All right. So they shut down their plant. All right. So this is a huge deal, right? Especially for not only the Middle East, but the world. Like you're talking about the globe that relies on this energy, right? It can't ship through the Strait of Hormuz because of all the crap that's going on over there. So this will be a pretty tumultuous time over the next week or so, definitely over the next week or so, until we could see probably the light at the end of the tunnel with regards to this conflict that's going. All right. I saw a note in here real fast. I just want to cover it. So from William Landlord, he says, Eugene, do you think this war will pan out like the Iraq war or worse or better? I'm just going to go off what and again, this is not a geopolitics, channel, but I will offer my thoughts, right? And this is how I'm looking at it. Right now, it seems that the Trump administration does not want boots on ground. They don't want to start up a bunch of bases like they did in Iraq. This is a completely, attack from over the horizon type of stuff using, missiles, air support, that kind of stuff. There is, the last I read, there is a incursion into Iran by Kurdish forces that are backed by the United States. So they armed a bunch of Kurdish forces. Those forces are going to go into Iran and then help, start an uprising. That is all over the news. That is what's happening over there. But anyways, let's get back to stock market stuff, because I could go on and on about that, because that's pretty much what I've been following for the last couple of days here. So I did run a poll. All right, real quick. I did run a poll in the chat basically asking, do you guys think we are going to go up higher from here? So let me pull up that poll. Again, StreamYard doesn't really give me the option to view that poll. Okay, so here we go. All right, so the poll was, do you think the market has officially bottomed out here, and do we climb higher from here? And then 77% of you said, nope, more volatility ahead. And then 23% of you said, yes, it looks like it. So I'm going to go ahead and end the poll there. I believe, I'm going to go side with the 77% on this one. I really do think that we're probably going to have a little more volatility, primarily because of what's happening in the Middle East. Okay, that is a huge, huge deal that's going on. Again, this is not just a nation with, honestly, just a bunch of guys with AK-47s and RPGs. This is a regional power with a lot of missiles. Okay, a trained army, a professional army by the some standards. So this is a huge deal of what's happening, and is causing not just instability in that part of the world, but regional instability. Now you have Spain, who's not allowing the U.S. to use their bases, and Spain basically said we're not going to be entertaining that. The United States responded by saying we're going to cut off all trade with Spain. Spain responded by saying, you guys did this to us during the Iraq invasion. We're already used to this. So, again, it's more crap like this is going to continue to happen, at least for the foreseeable future, at least easily into the week or two, as things continue to get ironed out. And then, of course, you have not only in the Middle East, right? You also have the EU that's starting to voice some concerns as well, or even add to the coalition forces, right? Cyprus was hit, so you have not only Greek, sending in some of their ships, but you have the French also sending in their ships. That's going to help with, ferrying these LNG tankers back and forth through the Strait of Hormuz. So it's a really fluid situation. A lot of stuff happening over there. But anyways, so I wanted just to answer that again. A lot can happen. Okay, so we have, let's see. Yeah, I agree, man. I agree. I agree 100% because I'm sure they have a bad taste in their mouth after what happened in Syria. So I will leave that there. Let's see. We have Dividend Sith in the chat. Hey, welcome. All right, hand salute over there. Okay, all right, let's continue on. So we have another one about Apple from Dan Ives, Wedbush Securities. So any Apple holders out there, we'll just listen in on what he has to say.
Technology research, Dan Ives. So Dan, welcome. So many topics to run through. We'll get to the White House meeting in just a moment. Any reaction to the Apple products the last couple of days that we've seen, and what this is the impact this will have on their financials?
Look, it's super smart. I mean, look, they're going down market, but they really have to, because right now they're looking to get more and more new buyers when it comes to Macs, when it comes to iPhones. And that's the smart strategy, because the reality is AI is coming to Apple. And this right now for them, if you look for memory and you look at everything that's happening, I mean, they're doing a very good job managing. And I think this could be ultimately 100 to 200 BIP incremental growth to the June quarter.
Wow. And I know that people are hoping to hear maybe something from Jensen Huang one way or the other on memory pricing. He's speaking right now at this Morgan Stanley conference. Here's something else he addressed, Dan, a couple of moments ago. I just want to mention it. He said that Nvidia's $30 billion investment in Openai could, quote, be the last time we'll have the opportunity to invest in a consequential company like this. He's talking about because they could have this IPO by year end. But what is the broader significance of that statement, do you think?
Yeah, look, part of it is he's playing a game of poker, right? I mean, there definitely could be more investments, obviously, in the coming years. You know, But I think the reality is there's more and more pressure for OpenAI, for Anthropic, for these other companies, where they're not just going to continue to get these investment dollars in the tens of billions. They're going to have to ultimately show profits. It's an arms race too. That's all happening, and I think you're seeing that with Anthropic and software and what's happening there. And Jensen's well aware of it. And he knows he has the magic wand, and when he talks, everyone listens. So
we'll be covering the OpenAI, Nvidia, Anthropic funding here in just a moment. Again, this is primarily Dan Ives' opinion on the matter and what's going on, and talking about Apple. So for any Apple shareholders out there, and I see that we have a contribution from Phil M. Great stuff, Eugene. I appreciate that, man. I really, really do. All right. I think I'll just add that to the coffee fund for myself, because I'm actually out of coffee and I have to make an order today. So I do appreciate that. Thank you so much. Again, it is very heartfelt. All right. All right. Let's continue on with this video.
You know, this is very strategic in terms of what he's saying here relative to OpenAI, a little shot across the bow.
The revolution will not be televised, Dan, but the AI revolution is going to be powered largely by natural gas. I know you're not the energy guy, but we've been talking a lot about the war in Iran and energy prices. Any part of you worries that what we're seeing in energy at some point may play havoc with AI?
You see what I'm saying, guys? Like I'm trying so hard not to cover the whole Iran stuff, but it's seeping into everything. Like every video, every news article I've been reading, it all has to do with what's happening in the Middle East. You can't escape it. And this is why I always talk about how things in the broader world impact the stock market, right? Either certain sectors of the stock market or certain companies. I mean, we see that some shipping companies, their stock prices have been climbing like crazy. One of them is VG, which is a shipping company. You guys can take a look at that stock. But VG had a huge spike to the upside over these last couple of months. But anyways, let's listen in.
Look, Brian, no doubt. I mean, obviously you're the energy guru. And I think the reality is that when you look at what's happening right now, the biggest worry is the shortage from an energy perspective. There's more data centers under construction than active data centers. It's why you have the White House meeting today. You know, these companies are going to have to flip their own bill. And look, nat gas is going to play a huge role. And big tech companies, the hundreds of billions they're spending, energy is going to be a piece. And also it's going to be a big second, third derivative. I could argue energy is going to be one of the biggest derivatives of the AI trade.
Yeah, and that said, Dan, I've been watching your list of kind of, you know, where would you be buying as we see this rotation, kind of vicious rotation? One day it's the software names that are up, and then Micron's down 7, and then it's up 7. And I noticed, I think ServiceNow is one of the ones that you feel kind of confident about, maybe in the software space. What do you think is happening broadly here?
Yeah, I think first off, I mean, it's that Anthropic AI ghost trade fear, right? And I do think that's a bottoming that we saw last week with the Anthropic event. I think investors realize bark's going to be worse than bite. Software, I think, is bottoming out. I mean, I talk about Microsoft, Salesforce, ServiceNow. You look at everything McDermott's done. Cybersecurity, look at CrowdStrike's numbers. Palo Alto. And I think Palantir, both strategically how they're positioned, also from a military perspective, that's going to be a huge positive. Look, this is not the time to throw in the towel in tech. It's a very bumpy, turbulent period, but you look at names like Microsoft. You look at sort of navigating the storm on safe names, defensive, but also offensive. And like I've said, I think the software sell-off here, the most disconnected sell-off I've seen in my career on Wall Street.
The most disconnected you've seen in your career, yeah. And there's Palantir, obviously, you know, with everything going on there. Quick last thought on this kind of fight between the Pentagon and AI. Is it all just a show?
Look, I think it just speaks to, like, the two worlds are colliding for, like, an Anthropic, right? And I think, obviously, OpenAI came in there, a lot of soap opera, what we saw Friday night. I'd say they ultimately are going to have to rely more on Palantir, more on the traditional software base. The LLMs are important, but they're going to be plug and play over the coming years. It's about the data. But for Anthropic, look, I think they touched the third rail situation. This is going to be, you know, this is going to be a very contentious issue within broader tech over the coming weeks and months.
So what are people getting wrong then? If the markets are unemotional, they're selling software because they believe something is occurring, Dan, what are the sellers getting wrong?
Yeah, Brian, what the sellers are getting wrong, they think Anthropic's going to unseat software players. They think structurally software is broken because of LLMs, Anthropic, OpenAI, and others. And I think that's, like I said, that's a fictional tale. Software, maybe they haven't proved it yet from a monetization perspective, but Salesforce, ServiceNow, Microsoft, cyber names, you look at Checkpoint, you know, CrowdStrike, Palo Alto, others, they're going to play huge roles. But look, that's what we're going through. This is going to be an arms race, but the Anthropic view that they're going to replace software, that's a fictional tale that I think ultimately will be a bottoming event for software.
Boom. All right. So he's just offering his thoughts on you know, the rotation out of software. But it's, and again, I agree with it. It is a kind of a mistake these names have been punished, even though AI disruption is coming. And we see that, companies are not only just laying off people, but, getting sold off. Companies like CrowdStrike was one of the big names that got sold off because Anthropic came out and said, hey, we have a feature that can basically go through code and identify vulnerabilities and also patch those vulnerabilities. That's the same, pretty much almost identically what CrowdStrike can do, right? So it won't be far-fetched to think that in the future, these AI models will also, be able to do almost those same exact things. But he brought up a good point, talking about the worlds colliding comment, right? We talked about this at length, where Anthropic did not want their software being used for mass surveillance and for autonomous weaponry, and that started a big fight. And then you had OpenAI come in, Sam Altman, say, "Oh, we'll help mediate this." Right? There's a lot of political theater, right? We'll help mediate this. We'll make it right. And then hours later, they ended up securing the contract, right? They ended up securing the contract away from Anthropic, and Anthropic's going to be used for the next 6 months. As a matter of fact, Anthropic was used for the Iran strikes, but they're going to be slowly migrating off of Anthropic and onto OpenAI, right? And then Sam Altman published a couple tweets saying basically, hey, we kind of rushed into this. We had to go back and make sure some of the contract language was more clear, and that their software is not going to be used for unlawful purposes, right? Mass surveillance, that type of stuff. But I mean, if you guys are familiar with Project Prism from way back when, Edward Snowden, then you already know most of that stuff is already happening anyways. But okay. So software selling off, looks like it's going to come back. I've been bullish on software. I still hold, my Palantir or PLTW, right? I'm still bullish on the company. He also mentioned that LLMs eventually, in his view, his perspective, are just going to be these plug and play things, right? These plug and play softwares for companies like a Palantir. Palantir uses its software, its orchestration software, that's the value. Excuse me, let me back up here. I'm losing my train of thought. All right, so Palantir, they have the orchestrator, right? And it's able to take these LLMs and be able to provide value to organizations, right? So the power for Palantir comes from the orchestration software. And that's what Dan Ives is talking about when these LLMs can just be plug and play. There's going to be multiple LLMs, right? And there's going to be LLMs built off of other LLMs. You have companies that are using the back end of, they'll have like some type of front facing, customer or white label thing. But then in the back end, it's probably ChatGPT, or it's probably Claude, or it's probably Perplexity or some other AI, right? So there's not that many players in the space. You have Gemini, you have ChatGPT, you have, Microsoft's Copilot, you have Anthropic's Claude, and you have Perplexity AI. So these LLMs, according to Dan Ives and his perspective, is that they're just going to be plug and play, but the real value is going to be from the orchestration, right? Where you're able to plug and play these LLMs and able to get whatever type of value you're looking for, right? Replacing jobs, agentic AI, AI agents that are able to do or click buttons, could be multiple virtual assistants, et cetera, et cetera. So future is looking good, in my opinion, for software. Again, why it's selling off, risk off environment. There's a lot of profit taking way back when, fear of the AI bubble, data center demand is not there, all this CapEx being spent and revenue not going to make up for it, or, profit not going to be make up for it. So that's really what's been hammering not only the software sector, but, the AI trade and the data center trade as well. All right. So moving on from that, let's see. Going back. Oh, Farouk, man. He looked in the mirror dressed like that and pointed at himself and said, "That's the look." I always say it, but Dan Ives is the most flamboyant dude on Wall Street, man. His drip is fire, absolute fire. I might have to start dressing like that. I really do like the color schemes he comes out with, man, because they be really out there. Okay, so Skeptic says, I keep hearing MLM. We scheming now, huge? No. MLM's definitely no Amway over here, right? I almost got sucked into that some years ago. I think I was in college, and I had a friend, probably not even a friend at this point. She pretty much alienated her entire friend group, trying to get them all hooked onto this MLM, Amway thing. she had the drinks and everything. I mean, I appreciate the hustle. I don't disrespect the hustle, but man, that was not for me. Okay, moving on. We got another clip. Let's skip this, all right, because we kind of already covered a lot of the Strait of Hormuz and the damage it's having on global markets and commodities, et cetera, et cetera. So we're just going to skip this video, all right? But I did want to bring this up. This is BWET. We covered it briefly. I didn't look at the year-to-date, and the year-to-date is actually 258%, okay? Did have a decent little pullback, 13%, whatever. But year-to-date, it is up 258%. And this is a ETF that holds future contracts. So this is absolutely insane. Just year to date, 258%. All right. Okay. Let's see. We've been going on an hour. Oh my God. We've been going on an hour and I haven't even covered the things I wanted to cover. Okay. Let's see. So Oak Unathletic says, is Grab the same as DoorDash and Uber in Asia? Yes. Yes, it is. So I use Grab pretty religiously out here. So Grab, and they do have a stock. Let me see if I can pull up the stock. There's some channels that cover Grab. I personally don't. I don't hold the company at all, but they're doing really well. As a matter of fact, one of their biggest competitors actually closed up shop, I think in Singapore. I think it's in Singapore they ended up closing up shop, but there's actually two competitors that closed up shop. So Grab is going to be able to take that market share. I've seen Grab all over, places like the Philippines, Thailand. I don't know about Vietnam. I'm sure they're out in Vietnam as well. But, Grab is actually everywhere. I mean, just you see them all over the place. And they can do everything from, your Uber, like taking you one place to the other. They have cars, motorbikes, etc. But you can also order your groceries. You can order food from restaurants. They have a pharmacy. They have like all types of stuff on the Grab app. It's actually really nice. Now, in the Middle East, they had Talabat. And Talabat was freaking awesome. I loved Talabat. It was so easy to use. And they were the only competitor in that entire place, realistically. I mean, you would be driving down the street and you would see 10, 15, motorbikes of just Talabat drivers. So absolutely insane how much market saturation they have. Like they're everywhere. You cannot drive anywhere without seeing either Grab in Southeast Asia or at least Talabat in the Middle East. But yeah, Grab is actually really, really cool. I do like Grab. I do use them a lot. Is Grab in Thailand? I haven't seen them on the East Coast. Grab is in Southeast Asia. They're pretty much all over the place. Singapore, Philippines, Thailand. I believe they're in Vietnam as well. Don't hold me to that, but I believe they're also in Vietnam as well. Let's see. From Oak, I'm familiar with Grab because of the YouTuber Amit Investing speaks about it bullish. Yeah. So Amit is the other channel that covers it pretty well. He's pretty big holder of Grab. I like Amit's channel. I recommend people do check him out. He does a lot of good content around or commentary around stock and just general market news. Speaking of bullish hood, actually it was Amit that got me on the hood. But speaking of hood, we did have an event today, all right, from Robinhood. I'm cutting this in the middle of the stream, all right, because I forgot to actually cover this, but they actually had a full stream. But this is their next generation of family finance, okay? And they have a whole stream about this. So these are some of the new features. Again, this is why I really like Robinhood. They are becoming the ultimate fintech app, just the ultimate finance app. All right, but you're gonna have Family Hub, so you can have all your accounts under one account, whatever. You're gonna have custodial accounts. There's gonna be trust accounts. This is huge. I think this is absolutely a big deal right here. Custodial accounts, in case you have like a child or something like that. Let's see. We also have tax aware transfers, so you'll be able to get more information, more insights on your returns, which is always nice. Just having all that data is always good, so you don't have to pay for something like a Snowball Analytics or something else. It'll just all be included in the app, which again I think is a big deal. I hate having multiple apps for everything, right? I would like it all just to be on one thing, like Blossom. Blossom Social, which is the finance community space. Think of like maybe not so much a X or Twitter, but it's just people talking about finance all the time. but Robinhood is coming out with Robinhood communities. And I think that's going to be a big, big punch to Blossom, in my opinion. All right. In my opinion, of course. But you're also going to get, new account types and then early dividends. I think this is a huge, I don't fully understand this. I haven't even watched the stream yet. I'd want to watch it to fully grasp what's going on here, but you're going to get early dividends. This is just crazy, right? 1 month early. So instead of waiting the full quarter, for most, traditional like blue chip stocks that don't pay, monthly or weekly, right? These are actual companies that pay a real dividend. Usually it's quarterly. You'll be able to get them a month early, which I think is also really, really cool. So they're also upgrading their cards, right? Their reward cards. You're going to get a platinum card now, or you could get a platinum card. So a lot of interesting stuff happening with Robinhood. Let me check my Discord real quick. I got a message from Skeptic here. Okay. Yes. So just real quick on the topic of the cards, and shout out to Skeptic. Thank you for sending this over. So the Robinhood Platinum card is a high-end credit card with a $695 fee, similar to like probably a Chase Reserve, Sapphire card. But the feature includes 5% cash back on dining, travel, plus a $250 annual DoorDash credit. The physical card is played with real platinum and is currently invite only. For family investing, a new experience allowing families to share account visibility, manage finances together. You're going to get the custodial accounts, the trust accounts. For custodial accounts, parents can now open accounts for minors. For trust accounts, new trust account options will be available later in 2026. And then, of course, you have the Robinhood Advisor Network, a pilot program launched to connect clients with registered investment advisors. That is huge. That is big right there. That is really big. I don't know of any other brokerage that does that wouldn't try to like funnel you into their own product or services, like Fidelity or Schwab. So for a fintech like this, like Robinhood, that is pretty crazy. I think that's really awesome. And why is because they're the first, because investing can get really intimidating, especially for new beginners, new investors. You have so much slop on YouTube. You have so much slop on X, right? You don't know where to really put your money, and you'll have counterpoints to some of the most sage advice, right? If people say buy an index, right? Buy an S&P 500 index. You'll have another camp that says no, you can outperform the S&P 500. Don't invest in that garbage. That's dead money, right? Like, where do you go? Where do you go as a new investor, right? So I think that's really, really good. I think that is very responsible on Robinhood's point. But also, as of March 2026, Robinhood announced early dividends, key details rolling out to customers by April 2026. Functionality is receiving dividend payments up to 30 days earlier than the official payout date. All right, and it applies to major U.S. stocks. That is really cool. Well, I'm sure people who are in those blue chip companies are definitely going to like that. Definitely going to like that. So yes, bullish hood. Let's see. Fruit says finance is about to get funky. Hear that, Victor? Real platinum. There we go. From Farouk, I had 2 CPAs and a financial advisor stole $3 million from me 2 years ago and still dealing with it. It's horrible. This is great news from Robinhood. Sorry that happened to you, Farouk. That really, really sucks. I've heard of similar stories like this happening. Absolutely crappy. I mean, I myself have gotten money stolen from me by a property manager. I mean, it's not nearly 3 million like you, but it, the feeling is mutual. It's shitty. It's like, it's like, who can you really trust, right? Who can you really trust? Anyways. Oak says, where do you go as a new investor? That's easy. Nvidia. Absolutely. Rocket, rocket, rocket. Hell yeah. Okay. We're going to breeze through this. So I mentioned this earlier. Okay. So in Central America, there's also something else developing that kind of went under the radar because of all the news that's happening in Iran. But U.S. expands Latin American drug fight with joint operation in Ecuador. All right. And this is just a blip that came out. I saw it and I thought it was really important because we saw what happened in Mexico. All right. A drug cartel kingpin was killed. And, Mexico, a lot of tourist locations basically erupted in local fighting. Right. The Mexican National Guard was activated. And then the Mexican army was sent in. A lot of police, were unfortunately killed. The same with some of the military over there. But it's also happening in Ecuador as well. Okay, so again, just more political stuff happening in the broader market, more geopolitics stuff. All right. I don't see this impacting the U.S. stock market really by any means, but I just wanted to show this, because again, it is happening just south of the border, Central America, where the U.S. is, and really little things like this can always explode into something bigger. No pun, but can always turn into something bigger later down the line. You don't know what can happen. Right now, there's talks about Cuba. Now, for some reason, and Jordi Visser called this out months ago, that people should keep an eye on Cuba because something interesting is going to happen over there, and it looks like that is starting to play out. So I just wanted to cover this. So going back to commodities, really interesting that that the Pentagon is looking for critical minerals. And this happened just before the strikes happened over in the Middle East. Okay. Whether that was by coincidence or not, no one really understands, or no one really knows. But this just shows that the demand is there for these critical minerals, right? And this is going to be bullish for a lot of the companies that are looking for these critical minerals. All right. So Pentagon sought fresh supply of 13 critical minerals day before Iran attack. All right. The Pentagon is seeking supplies of nickel, graphite, and other minerals. Proposals due to the Pentagon by March 20. All right. And this is the latest move by the Trump administration to boost domestic minerals supply. So again, this is the U.S. trying to wean itself off China, get away from Chinese supply or supply chains. All right. The U.S. military asked mining companies last Friday to help boost domestic supply of 13 critical minerals used to make semiconductors, weapons, and other products. A document reviewed by Reuters showed the request the day before the U.S. and Israel launched strikes on Iran is the latest example of Washington's push for more access to the materials used widely in warfare. All right, the Pentagon asked members of the Defense Industrial Base Consortium, or DIBC, a group of more than 1,500 companies, universities, and others that supply the military, for proposals to be submitted by March 20 for projects that could mine, process, or recycle select minerals. All right, and so here's some of the key details here. The list of 13 minerals sought include arsenic, bismuth, Victor, man, I'm going to need some help over here. Gadolinium, germanium, graphite, hafnium, nickel, samarium, tungsten, vanadium, yttrium, and zirconium. All right. So whatever, those metals they need, the U.S. is looking for those metals. The U.S. is relying on imports for most of the 13 from China. China is a dominant global producer of all of them. All right. So again, now the United States is looking to get off of those Chinese supply chains. All right. So the article just goes more in depth about some of the companies that are going to be putting in their proposals and what they're for. We have some of the miners saying that this is an opportunity that they've been looking for so that they could, get these mines operational. But again, opening a mine, it's not something that happens over a day, right? Just like building a data center, it's going to take, probably a year at least for these mines to open. But they're also looking for, again, like they mentioned earlier, they're also looking for companies that can process the minerals, right? Process the minerals, not just go out and dig it in the ground. But again, when we're talking about this, commodity super cycle, this is it, right? I mentioned that this is more or less a government super cycle, and it's impacting commodities. It's impacting the AI trade. It's impacting the debasement trade, all this stuff, right? You also have the Clarity Act, which we're going to cover briefly here, but it's also going to impact that stuff. This is all government-led initiatives. All right. The Pentagon asked for detailed information on the costs, including labor, material needed to build a mine or processing facility. Projects could be awarded development funds ranging from $100 million to $500 million, according to the request. Here are just some of the metals. Yttrium shortages, especially, have set off alarm bells through the aerospace industry. All right, one of the 17 rare earths, yttrium, is used in coatings that keep engines and turbines from melting at high temperatures. All right, so think like, fighter jets, probably rockets that go to space, etc. That type of stuff, or even missiles, right? Even missiles, they need that special coating. All right, without regular application of these coatings, the engines can't be used. All right, the domestic supply of critical minerals remain essential to safeguarding both national security and economic stability, said Mark Chalmers, the Energy Fuels CEO. Nickel is widely traded metal, and Indonesia is a top global producer. Yet Jakarta has been throttling exports of the metal used widely in stainless steel and battery production. right, so now you guys got kind of a taste of what some of these metals are used for. So very, very bullish on the space. We have from Skeptic, bro, I'm gonna need all them metals. I need them all. I'm with you, man. I'm with you. And again, for me personally, you know, I'm just mining ETFs, right? Mining ETFs is really all I'm putting my money in. I can't do the individual miners. I don't have that muscle. Okay. Broadcom, we're going to cover Broadcom earnings real quick. All right. This stream's already been running past an hour, and I want to be respectful of everybody's time. And I also have to get going here soon myself. All right. So Broadcom ticks up as quarter one results outlook top Wall Street's forecast. So quarter one, Broadcom smashed it. Okay. For the period ending Feb 1, the Hawk 10 company said it earned an adjusted $2.05 per share. Revenue rose 29% year over year to $19.31 billion. Included in the 19.31 was $12.52 billion from semiconductors, up 52% year over year. Up 52% year over year. All right. Again, that's just proving that these data centers are getting built out. They need all these semiconductors, all these companies that are buying up ASIC chips. The demand is there, right? And Broadcom earnings is showcasing that. All right. While infrastructure revenue rose 1% to $6.8 billion. All right. Broadcom achieved record first quarter revenue on continued strength in AI semiconductor solutions. Quarter one AI revenue of $8.4 billion grew 106% year over year above our forecast, driven by robust demand for custom AI accelerators and AI networking. Said Tan in a statement, our AI revenue growth is accelerating, and we expect the AI semiconductor revenue to be $10.7 billion in quarter two. Looking ahead, Broadcom says it expects second quarter revenue to be approximately $22 billion with adjusted EBITDA around 68%. Analysts had expected $20.5 billion in the second quarter sales. So we're getting a $1.5 billion expected beat from Broadcom. Huge, huge news. All right. So again, I sound like a broken record player, but every time I hear this talk of, you know, the AI trade is dead or a bubble or whatever, right? Garbage, trash. Like really prove it. Bring an actual bear case. Circular financing, I agree with. That is kind of worrisome. That is worrisome. But the demand for these damn semiconductors and continued build out of these data centers and continued, upgrading of these LLMs throughout, all of the companies, and everyone's just building out just insane amount, or they're paying insane amounts of capex, capital expenditures for data centers is insane. And of course, we're not even through the first half of what this could look like in the next 5 to 10 years. Not even close. Some of the data centers aren't even halfway finished. All right, they're still getting built out. So absolutely, absolutely crazy. So real fast, a billionaire Tesla whale buys $1 million Nvidia shares to support nervous market. This, I don't know why this is news, but I wanted to include it. All right, billionaire Leo Koguan, emerged in recent years as one of the largest individual shareholders of Tesla, said he bought 1 million shares of Nvidia on Tuesday. All right, I am convinced AI is not a bubble, he said. It is only the beginning. And that leads me to this next part. Iran data center, all right, play enters agreement to buy 50,000 more Nvidia B300 GPUs. All right, Iran is an Australian-based data center business, has entered into a formal agreement to purchase 50,000 Nvidia B300 GPUs. So again, for me personally, I'm a shareholder in NVDW, which is a ETF from Roundhill for Nvidia, but I'm bullish on Nvidia. I'm bullish on Palantir. So I like to cover them whenever they're in the news, right? But again, demand is there, right? I don't know why people sell off Nvidia for AutoZone, right? Or why they sell off Nvidia because of spending too much spending in the AI space, right? People gotta be careful, man. Absolutely gotta be careful. I think it is still a great opportunity, in my opinion, not financial advice. All right, I still think Nvidia is a great opportunity, all things considered. All right, so we'll move on from this. Let's see. So this is the $30 billion investment into OpenAI by Nvidia. All right. He's saying that this might be the last. And the reason for this is because you have Anthropic and OpenAI expecting to IPO later this year or probably early next year. Okay, so all these companies don't want to just keep funneling money when they're about to go public, because then you're going to have public, equity, being issued and then money coming in, buying up all that equity. So they don't want to be the ones holding the bags, I guess. But anyways, Nvidia CEO Jensen Huang said the company's recent $30 billion investment in OpenAI might be the last time it invested in the AI startup as it gears to go public. Huang said, speaking during the Morgan Stanley Tech, Media, and Telecom conference on Wednesday. He also mentioned that Nvidia's $10 billion investment in OpenAI rival Anthropic would be its last. So he's investing in both OpenAI and Anthropic, and you guys know that those two are competitors, right, or rivals. But just as part of the agreement for OpenAI, OpenAI secured 3 gigawatts of dedicated inference capacity, 2 gigawatts of training capacity on NVIDIA's Vera Rubin systems for its AI data centers, OpenAI said on Friday. So that deal did not come without strings attached. And again, when you talk about the circular financing, I mean, hell, who's at the center of all of this? And my opinion is it's going to be NVIDIA, right? Everyone is buying NVIDIA chips, right? There's a demand for them and their new chipset that just came out, the Vera Rubin, all right? We'll just hear this video real quick, and they're just going over the investment, the $30 billion investment into OpenAI from Nvidia.
CEO Jensen Huang making comments just a short time ago about that company's recent investment in OpenAI. Christina Partsinevelos joining us now with these headlines. What do we know?
Well, Jensen Huang making news, like you said, specifically at the Morgan Stanley Tech Conference. The Nvidia CEO saying that $30 billion is likely as far as his company goes when it comes to investing in OpenAI. He said, quote, "The opportunity to invest $100 billion in OpenAI is probably not in the cards." And the reason for his statement is that OpenAI is heading towards an IPO, potentially by year end, which would close the window on private investment at that scale. NVIDIA's CEO also called this, quote, "the last time NVIDIA will have the chance to invest in a company like it." Worth noting, though, this comes after, maybe we can say, a rocky stretch. Reports earlier this year suggest the original $100 billion deal had stalled. Remember, we talked about it on air back in November. Today's comments suggest the two sides have maybe settled on a cleaner, simpler structure. And it's not just OpenAI. Jensen Huang also said NVIDIA's $10 billion bet on Anthropic will, quote, "probably be its last investment there, too, also ahead of an expected IPO." The era of NVIDIA writing these massive checks to the AI labs, its supplies may be coming to an end, and the public markets are about to take over. Scott.
So there we go. And then I see a comment from Gabby9093. Eugene, can you roast my portfolio? I would like to receive any feedback, comment as I'm trying to invest for the long term, but honestly, I don't know what I'm doing. I would recommend you check out our Discord. So there's a link down below. You could check it out, sign up for it. It'll send an email to you with the link to our Discord. And in there you can go in and ask for public opinion. And honestly, we have some really smart people in that community. Of course, none of this is going to be financial advice. You got to do your own due diligence. But at least someone will offer an opinion or two. And I might even offer my own opinion. But definitely consider that. And offering for feedback is definitely a smart move. I think that's always good. I think that's good. Just again, take everything with a grain of salt. Take everything with a grain of salt. You still have to do your own. You still have to do the work, right? You still have to do the work. You still have to do the research and see if it makes sense for you. Okay, because on YouTube, there's just so much noise. You don't know where to start or what to buy. For me personally, again, I would always recommend people consider Triple Q or the S&P 500, something basic, right? Something where your money's not going to go to zero. You're not going to be dealing with NAV erosion. You're not going to be dealing with any of that garbage, right? And then once you get to a certain threshold, then you can start looking at, thematic plays, sector plays, sector ETFs, thematic ETFs, high yield ETFs if you want to destroy your portfolio. But you can really, you can at least get an idea of what you want to do. But you also have to balance that with your goals. Like, what are your goals for your investment portfolio? A lot of people get sucked into the allure of living off passive income off their portfolios. You need a lot of money to start. This is why I say, depending on where you're at with your risk tolerance, how old you are, where are you at, financially, do you have a lot of debt? Do you not have a lot of debt? How much money are you putting into investments? How big is your portfolio? All of this stuff, all these questions come into play. And that is really how you end up with, what your ideal portfolio should look like. When you start getting into like the thematic ETFs and the sector ETFs, the high yield ETFs, et cetera, you really start complicating your portfolio. Like really, you really do. Like that was one of my biggest lessons of 2025 was getting sucked into all these different little plays, these swing trades, all this garbage. And I even got sucked in like now, right? Like I even got sucked into like the metals space, commodity space. But you have to decide what makes sense for you. What thesis, what thesis for whatever themes make sense for you, right? Because what will happen, and again, we see it all the time. What will happen is people will hop in these ETFs, not fully understanding what they're investing into, and then when the ETF drops a little bit, or a lot, then they have the surprise Pikachu face, right? They're like, oh, these ETFs suck, or this sucks, or that sucks, but they didn't even know what they were buying to begin with. So that's where you have to do the work. That's where you have to, do a little bit of the due diligence and not just watch YouTube videos, but actually go to the product website, look at, some ETF comparisons, read the prospectus, look at the holdings, understand what the holdings are, et cetera. You have to do some of the work. So I would recommend, I'll recommend it to join the Discord. And of course, we have someone from the Discord, Skeptic. Shout out to you. He said, I'll roast it. So there we go. From Serial Beggar, he says the easiest way to make a small fortune with a high yield ETFs is to start with a large fortune. That is a fact, man. That is a fact right there. I love, what was it? The old Bitcoin thing is like, how do you make $1 million, or how do you make $1 million with Bitcoin? You go in with, $1 billion or something like that. But that is absolutely true. We have from Comic Book. Hey, welcome. My main source of investing homework stems from Morningstar, Value Line, Barron's, and the Wall Street Journal. I get all of these for free from the public library. See, that is perfect. That right there is perfect. That is the type of stuff you need to kind of just absorb. Like, you don't have to know everything when you're starting out. You're not expected to, right? But just go in and absorb everything like a sponge, right? Listen, if you don't understand certain terms or percentages and what this does or what that means, Google it. Spend a little bit of time. My favorite book, and it's still my favorite book, is The Simple Path to Wealth by J.L. Collins. That book, summarized, just tells you to buy the S&P 500, right? He's back tested. He's tested REITs. He's tested bonds. He's tested international. And he basically landed on, after all this experimentation, to just buy the S&P 500. But he explains why. And I think that is the most critical point in all of this, is understanding why, right? Like, why would you buy XYZ ETF, right? Why does it make sense? And why doesn't it make sense? So I think that is a critical point in that book. Something worthwhile to look into, right? And again, if you're brand new to investing, you have no idea what you're doing, consider SPY, SPY, right? Or VOO. You can't go wrong with those. Skeptic says, using free resources. That's what I like to hear. Me too. I mean, I pay for a couple of things, like a couple of tools. Me personally, I pay for Seeking Alpha, because I want to get that news. But you can get news from CNBC, just like we're showing here on YouTube. You can get news from CNBC, CNBC.com. You can get articles. You can even get information from Robinhood, the brokerage app, right? If you check a stock, like an individual stock, it'll give you like an AI layout of what's happening with that company, right? So you get, a lot of good information right up front. Just be careful, getting too much information, right? Information overload, going with baby steps. I would disagree about can't go wrong with SPY or VOO. Giving a half answer, like always, Victor. Always a half answer. Well, you can't. I don't care. I'll die on that hill. You cannot go wrong with SPY or VOO. You cannot. Absolutely not. Now, if you want to be, if you're trying to beat the market, if your goal is to, have outsized returns, then yeah, there's other ETFs, broad-based ETFs out there. But again, for the very big, or for the novice investor, somebody who doesn't know what they're doing, again, my opinion is you can't go wrong with that. If you have an ETF or strategy that you would like to talk about, I mean, you can always either post it in the chat, or, I can bring you on and you can give your thoughts. Because I'm interested as well. I mean, what would you go with? Okay. All right. Going back, let's see. Let's see. Hold on. Okay.
Christina.
Let's close this. Okay. Other news, Google eyes quantum computing. So shout out to anyone who's holding Google. This is a word wall. All right. A lot of words over here. All right. So I'm going to try to just give you guys the highlights. All right. So Google's senior vice president and chief financial officer, Anat Ashkenazi, said they remain focused on transforming their surging capital expenditures into future profitability. All right. The metric they're using is ROIC, all right, return on invested capital. Basically what they're doing, or what they're talking about, is putting a lot of money into all these different ventures, all these different investments, and they're starting to see that return come, right? They're starting to see the numbers turn positive from their investments. Okay. So real fast, they talked about, let's see, if you think about some of the experiments, maybe Waymo 5 or 10 years ago, now it's delivering. All right. Obviously, some of these experiments are early stages. Ashkenazi said during the Morgan Stanley Technology, Media, and Telecom conference on Tuesday. And then underneath that, the foundational layer of Gemini and the frontier models that are supporting the entire company. So we look at, for example, if we're investing in X in cloud, and I think I've shared on the call that approximately half or just over half of our ML compute this year is going to cloud. So they're, again, putting a lot of money. Google's spending billions of dollars on cloud compute. All right, the company continues to expand its capex. Last year, Google guided for 70 to 75 billion in capex and ended spending upwards of $91 billion. This year, Google plans to spend 175 to 185 billion dollars. While the bulk of that spending is going to data center expansion and computing power, a share of it is going to future innovations. This includes quantum computing, robotics, and AI for drug discovery. All right, so Google is looking forward. Again, we talked about how even though the talk about this AI, bubble, data center demand is not there, you have to look in the future. And that's always the truth for tech companies, in my opinion. It's like you have to look a couple years in the future and wait for. Let me try to collect my thoughts here. When you build out these data centers, right? Low level example. When you build out these data centers, you're expecting the demand to be there. They already have proof that the demand is there. They just don't have the compute space. And in order to get the compute space, they need to spend a lot of money on these data centers, right? For that demand to be fully realized. All right, is what I'm trying to say here. I'm running all over the place. My mind is racing like 1,000 feet a second. All right. So anyways, Google is betting big and they're continuing their CapEx spend. All right, is a summary of that article. All right, Amazon's Bahrain data center was targeted by Iran for supporting the U.S. military, and that data center was struck. Okay, so even the Mag 7, even these companies that have data centers all throughout the world, they're also getting targeted in that unrest in the Middle East. Right, so Amazon's data center that supports the military, AWS, that type of stuff, was struck. All right. We're going to finish off the stream real fast because I really do have to get going here. So we already covered this. Jane Street's massive silver position. Openai is looking to contract with NATO. Another big move by Openai. All right. Since Anthropic doesn't want their stuff to be used for mass surveillance or autonomous weapons, Openai is like, whatever, we'll just take that ball and run with it. So Openai is considering a contract to deploy its AI technology on North Atlantic Treaty Organization, or NATO's unclassified network. A person familiar with the matter said on Tuesday, days after the ChatGPT owner struck a deal with the Pentagon. All right, the Wall Street Journal first reported that OpenAI was considering an agreement with NATO. I did not have time to go through this whole article, to be honest, because I had to get ready for the stream. But this is just showcasing that OpenAI is making its moves in that space, right? So we'll see what comes of that. What kind of contracts they can secure, because this could be really bullish for when they IPO, right? It's just going to further increase their valuation. So moving on, moving on from that. JP Morgan is having a blockbuster moment, says Joe Burnett. All right. So this is talking about the Clarity Act. All right. We're going to be talking about the Clarity Act real briefly, and then we'll close out the stream. So this is Jamie Dimon voicing his concern about the Clarity Act. So the reason why the Clarity Act was basically paused was because it had to do with rewards on stablecoins. And right now, the biggest friction is, if these crypto exchanges, I can't use the term banks, but these crypto exchanges, they want to offer rewards on their stable coins and things like that, then they should just become a bank, right? That's from the bank's perspective. So let's listen on what Jamie Dimon has to say, because when you start doing that, that's when you really start blurring the lines, right? You start blurring the lines, like, is it a bank? Is it not? It's offering some type of interest, right? And that's what the big fight is right now. So let's listen in on what Jamie Dimon has to say.
You and your peers have reportedly clashed with Coinbase's Brian Armstrong over the Clarity Act and specifically this idea of crypto exchanges offering rewards for stablecoins. And Armstrong was on CNBC with Sarah Eisen a few weeks ago from Mar-a-Lago, and he said there's a path forward for the market structure bill that's a, quote, win-win outcome for everyone. How are you feeling about it right now?
The banks feel strongly that there should be, rewards are the same as interest. And that, a compromise would be that you could pay rewards on transactions, not balances. If you are going to be holding balances and paying interest, that's the bank. You should be regulated by a bank. So we've been firm. One thing over here, yes, but if you want to be a bank, become a bank. Then you can do whatever you want under bank law. So I remind people, and your viewers may not know, banks have restrictions and requirements. FDIC insurance, AML, BSA. We have Community Responsibility Act, which means we have to open 25% of our LMI neighbors. We have social requirements. We have liquidity requirements, capital requirements, transparency requirements, reporting requirements, board requirements, government's requirements. If they want to be a bank, so be it. So what we base is level playing field by product. It can't be you have these people doing one thing, without any regulation like that, and these people do another. And if you do that, the public will pay. It will get bad. So people should take a deep breath at what is you want. And we want competition. We're actually one of the biggest users of blockchain. And we created the JP Morgan deposit coin. We've moved money real-time payments. We're moving a lot of data now using blockchain. So we're in favor of competition, but it's got to be fair and balanced, level playing field. It's not
a fair and level playing field. Meanwhile, they've been screwing over their customers for years, decades. Bank of America with their garbage. I get really irritated every time I talk about Bank of America, but they were doing a lot of predatory stuff. But anyways, it's comical to hear Jamie Dimon, and I like Jamie Dimon. I like hearing his thoughts, especially when it comes to the economy. But he's talking about a level playing field, right? Banks have never ever played on a level playing field. They always had the advantage. But anyways, very upsetting, right? Very, very worried. They want these stablecoin companies, these exchanges to basically become banks, right? Get regulated the same way a bank would, because if the stablecoin, not issuers, but these stablecoin exchanges, whatever, if they're able to offer better interest rates or staking rewards or rewards for their stablecoins, better than a traditional money market account that JP Morgan or Bank of America or these other companies or banks would offer, then why would I put my money with JP Morgan or with Bank of America when I could just go to an exchange, put 100, let's say $100, and I'm going to get 5% on my stablecoin, right? What's the point then? And that's really what the fight is about. And they want a level playing field, which again is laughable. But yes, that's coming from Jamie Dimon. Trump sides with crypto firms in a $1 trillion battle with banks over stablecoin yield. All right. Again, that's what this is all about. President Donald Trump is throwing in his support behind crypto firms in their high stakes battle with U.S. banks over whether they can offer interest like returns on stablecoins. Trump, in a social media post late Tuesday, ratcheted up pressure on banks to relent on the stablecoin yield issue. The Genius Act is being threatened and undermined by the banks, and that is unacceptable. Trump said in a post, they need to make a good deal with the crypto industry because that's what's in the best interest of the American people. The president, whose family has interest in the crypto industry, has hosted a series of White House meetings between the two sides in hopes of brokering a deal, but the banks haven't relented. Right? Again, talking about playing fair. The banks honestly can go screw themselves. Anyways, guys, I'm over here being upset. Okay. We went over a lot in this stream. All right. I apologize if the stream went on much longer than usual. It's just we had so much news to cover. But let's see. Where can I end this? Let's see. So we have some comments. Oak Unathletic says SoxQ is a no-brainer ETF. Huge. If it pulls back, I honestly don't worry. Even 1%. I'm excited to buy more. That's awesome to hear. Again, I think semiconductors they're going to do well over the next decade, easily over the next decade. Let's see. Sergio says, tell us how you feel, Huge. Yeah, I'm going to be honest. All right. back in 2009, I think 2009, 2010, Bank of America had the overdraft fee, right? Had the overdraft fee. If some of you guys remember this. So they would basically front the bill if you had no funds in your account, and then they would hit you with this fee, which was like 30 or 45 bucks, right? You're thinking to yourself, okay, not a big deal. But what happens when you get charged $45 for going over 30 cents, right? Going over 30 cents. There's no money in the account, and still Bank of America would pay and then just hit you with a $45 or $30 fee, right? Overdraft protection, right? Absolute BS. There was no way to turn it off for a long, long time. So people were just getting hit with overdraft fees, right? And this stuff piles up. I mean, imagine getting 10 of these things. That's almost $300 to $450 that you have to pay to Bank of America or some of these other banks, right? So eventually it made a lot of mainstream news. A lot of people were unhappy with it. You couldn't fight it. You couldn't take it off. You couldn't, nothing, right? Eventually Bank of America was like, okay, we'll add a on-off button. Right? That's what we'll do. We'll add an on-off button after they already stole all of this money from people, right? So that's why I dislike banks quite a bit. All right, I think they can go fornicate themselves because of that stuff. They're predatory. That's really it. They're predatory. But this is my personal opinion. All right, I hold no stakes in any stocks like JPM or Bank of America or any of the other ones. Wells Fargo, Citi, etc. I don't hold any stakes in them. Again, I just don't like how predatory they were for, the everyday US consumer. Anyways, we have from Skeptic, banks ain't shit. Let's see. I need an hour just to bleep for my diamond comments. I know you don't like banks, Victor. I know for sure. It's funny, like the people that hated banks the most were usually the gold bugs, like usually people who had a stack of gold somewhere. Or I knew this one guy when I was working in the Middle East, and he didn't tell me how much gold he had. He just said he had gold, right? And he had hidden it on his land, on his plot of land. So what he did was he memorized this map. He never wrote it down, how many steps, which way, which other way. And he told me he had multiple gold drops. Essentially is what it was. He dug like 6 feet down, and then he dropped like pretty much all of his gold. I don't know if I believe him, but he did tell me that, and I was, he went on a huge rant on why he hated banks, and I remember that very well because he sat in my office and we just were talking finance, and he said how he hated stocks, he didn't believe in them, and he hated banks. And that was pretty much it. I'm sure if he's been collecting gold for as long as he has, he's probably doing very, very well for himself. Yeah, see, Skeptic happened to him as well. Same thing happened to me. Bank of America stole so much from me doing that crap. Yeah, the freaking overdraft fees, man. And they ended up paying, I think, a huge fine or something like that. Like it went up to Congress. Like it made national headlines how these banks were ripping off people but they called it overdraft protection, right? You think you're being protected, but no. Overdraft protection would be just denying the damn transaction. But no, we'll cover it and we'll add in a $30 to $45 fee. So I got hit again for 30 cents, going over 30 cents. I got hit with a $30, $45 fee, whatever it was, right? So I was super pissed, and it happened multiple times, not just once or twice, right? It happened multiple times. I mean, I was a little punk 18, 19-year-old, right? Like I'm not tracking my finances. I don't know what's going on. If it gets denied, it gets denied. Like whatever. I'll just, not buy it, I guess. But nope, not with these banks. They knew how to play it. They knew how to make money. I see your comment, Sergio. I'm not going to put it on the screen, but I do see it. All right, guys. I think that'll do it for me. I think that'll do it for this stream. All right. We've been going on for almost an hour and 45 or 40 minutes. So I've been yapping on for quite some time. As always, I do appreciate all of the viewers. All right. Right now we have 30 from X and about 30 from YouTube. All right. We've been fluctuating. I think our highest reach was about 75 for this stream. So I appreciate you guys joining in. All right. I really do. It does mean a lot. And with that being said, you guys have a wonderful evening, a wonderful day, afternoon, wherever you are in the world. And as always, I will see you guys in the next stream. You guys take care.